Thank you for joining another Foenix Partners trading update. Today we have a domestic focus and we're taking a moment to consider what is driving the pound. Put simply, it's not politics. The pound is becoming desensitized to the volume of political headlines that we're seeing. And actually, if you look at how the market's responded, very little move is happening on the back of political headlines or political announcements or any kind of changes. The exception a little bit was the election result, which was a surprise, and we saw the pound losing about 2%. But really in the context of shock events, political events, so say comparing it to the referendum last year, we saw 10% losses within hours and the pound went on to lose 20%. So this recent result, actually very contained moves in the pound. Again, no move on the back of the announcement of an agreement with the DUP. So markets really quite numb to any changes in the domestic political outlook. That does not extend to Brexit. The pound continues to be very responsive to announcements from negotiations in Europe, and be those positive or negative. So we're seeing a direct reaction there, and that is set to continue in the coming weeks, months, and really for this 2-year period. The other key driver at the moment is monetary policy. So markets expect 2020 to deliver the next interest rate hike, but actually we saw a shift in voting pattern from the MPC last month, and our view, which is I would say a growing consensus in the market, is that that date will be brought forward. The question now is, will it be as soon as this year, or really will it be 2018 or 2019? Either way, we see some potential sterling upside there. Taking a moment to look ahead, the banks actually publish forecasts. So all the banks publish forecasts of where they think the main currency pairs are going. In this case, we take a look at sterling US dollar and sterling euro. The consensus view is that the pound will gain against the dollar by about 2 cents over the next 12 months. And against the euro, again, it will gain about 2 cents from current levels. So in 12 months, in summer of 2018, we're likely to see, according to the forecast, sterling US dollar around 128, 129, and sterling euro circa 116. Now, it's worth caveating that by saying there's a real range of views. You know, people make it these forecasters make it their life work to understand where markets are going, to make predictions. And we see, for example, sterling euro, the range is Barclays expect 132 in 12 months time, HSBC expect parity. So that sort of hints at the divergence in views, and that's not normal for us to see such a wide range. Clearly it hints at the uncertainty that is driven by the current Brexit negotiations that really could go firmly one way or the other. Not particularly helpful, I know, but in general the consensus is sterling to strengthen. So the summary is sterling desensitized and not responding to political headlines. It continues to be very reactive to Brexit announcements and very much driven by monetary policy. In general, a little bit of sterling strength. Thank you.